Accounting equation and Excel. Adjust worksheet for adjusting entries. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation using Excel. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our crunching numbers is my cardio product line. Now, I'm not saying that subscribing to this channel, crunching numbers with us, will make you thin, fit, and healthy or anything. However, it does seem like it worked for her. Just saying. So, subscribe, hit the bell thing, and buy some merchandise so you can make the world a better place by sharing your accounting instruction exercise routine. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Or in Excel, if you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you could begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. That is, if paper and pencil still even exist these days. But in any case, if you do have access to this workbook, though, 4 tabs down below. Example, month 1, practice, month 2, example, in essence, the answer key. Month 1, prior month of operations, the practice tab having pre-formatted cells, so you can practice the practice problem with less Excel formatting. Month 2 tab, the one we will be working in, is where we started with a blank worksheet, but are basically working within a template at this time. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing, remembering that we're basically building our bookkeeping system using the accounting equation as, in essence, our trial balance from which we can construct our major financial statement reports, that being the balance sheet, income statement, statement of equity. We now want to create this nice clean worksheet that we can use for our adjusting entry process, as might be done if you were like a CPA firm at the end of the year, putting together a worksheet in order to construct the financial statements and do end of period adjusting entries for that, and or possibly for tax preparation as well. However, of course, instead of debits and credits, we're going to be using the accounting equation in our practice problem. So let's do a quick recap of what we have done thus far. We've set up our worksheet. We did the month 1 worksheet, or month 1 data input into that worksheet. And then at the end of month 1, we wanted to close out the income statement so we can see month 2, just the current month of operations. Therefore, on the income statement, we closed out the income statement to the equity account, and then we copied over the beginning balances to the month 2 worksheet. At the top of that one, we were able to see the permanent balances, or the permanent accounts, the balance sheet account. And then on the income statement, we kept the top bit for the prior month. And then down here, we had the current month activity. So this is the income statement for the current month of operations. So now we're going to imagine that 2 months of operations have passed, and we're going to do our adjusting entry as of the end of the second month of operations. Now, this is a little bit wonky because oftentimes you would want to do the adjusting entries maybe monthly or basically at the end of the year, depending on your circumstances. The idea of the adjusting entry is to make the financial statements correct as of a point in time for external reporting or possibly for tax preparation. For our practice problem, however, we don't want to do a whole year of data input. That would be quite repetitive. And therefore, we're going to do adjusting entries after 2 months. So 2 months have passed. We're going to do the adjusting entries as of the cutoff date of February 28. Typically, the end of February is going to be the idea of it. Now, so that means that I want to take these ending balances and basically convert them to the top bit right here, so that this can be our starting point. This will be the unadjusted balance, and then we'll do our adjusting entries to them, and then we'll talk about possibly the concept of reversing entries. So quick overview of the objectives of the adjusting entry process. Remember, what we want to do is create kind of a divide between the accounting goals for the bookkeeping and then the goals for external reporting, which might include external reporting if there were shareholders and whatnot, as well as internal decision making for management, as well as for tax preparation at the end of the year. So the typical idea with the adjusting entries is we're willing to sacrifice not being on a perfect accounting basis, typically accrual accounting basis, because that's the kind of standard normally for external reporting, but use similar concepts for cash-based system if you're using it for taxes. We're going to sacrifice not being on a perfect accrual system in order to make the data input easier for certain transactions, which normally classically has an issue with the timing situation, as we will see. So usually classic adjusting entries have a timing component to it. We're sacrificing the timing in the middle of the period, the middle of the month or the year, in order for the ease of transactions that we plan on cleaning up when we do external reporting at the end of the month or the end of the year. So from a practical standpoint, as a bookkeeper, you might do this yourself at the end of the year, or you might work with a CPA firm. Either way, you really want to get these adjusting entry concepts down, because this is the thing that allows both of you, or both parts of you, right, whatever part that you're working on, to focus on the objectives of that particular thing and then shore it up at the end. So you're compromising between these two kind of objectives. Now, with the advent of software, especially with the use of bank fees now, we have some added kind of objectives that aren't classic, maybe adjusting entries, because they don't have a timing component to them, but they still can be thought of as, in essence, adjusting entries, because the objective is going to be, I want to make the bookkeeping as easy as possible. I want to be able to communicate with vendors and customers, as well as employees, being able to pay them on time according to a system in as clean and easy a way to see as possible. And I would like to automate everything as much as possible, given the fact that we have bank feeds now. And that last one in particular might lead to situations where we're gonna sacrifice again some of our reporting in the middle of the month in order to automate things more easily, and just figure that we're going to shore that up and fix it at the end of the month, which we alluded to sometimes when we do the adjusting entries, as we talked about, say, for example, when we had loan payments breaking out between the interest and principal, or when we talked about payroll, saying, what if someone else, like a third party, is doing the payroll? Could we kind of be on a cash basis in our system, automating what we're doing and then shoring it up at the end of the period, month or year? So those are things that we can add to our normal adjusting entry process as we do this. Okay, so the first thing we're gonna do then is we're gonna take our ending balances, which have not yet been adjusted, put them into our worksheet here, and then do the adjusting entries. So, and it's going to basically look like this, right? So this is going to be our beginning balances, our unadjusted balances. Let's go to the end of month 2. This is going to be what we're going to start with. Now I'm going to copy this over and make another tab, which is now going to be our adjusting entries tab. So the way to do that is I'm going to hold down Control and then left click on the month 2 and then drag it to the right. So now we have month 2, number 1, month 2, and it has a 2 next to it. I'm going to double click on the name and rename it, and I'm just going to call this adjusting entry. Let's just do ADJ. And then I'm going to pull this month number 2 back over here. So now I have 1, 2, 3, 4, 5 tabs. I'm going to right click and make it green. So this is now part of the example tabs, and I'm going to be working in this adjusted tab. So what I want to do is take these ending balances and pull them up to the top. The easiest way to do this is just to delete everything, and then I'll go over here and pull these ending balances from this tab. So I'm just going to clean this whole thing out. I'm just going to say, let's go up to the top and take all of this stuff and just delete it. I'm just going to delete it. It's crazy, but no, you're going to break it. No, it's okay. Don't worry. I know what I'm doing. I know what I'm doing, Wyatt. Let's pull this down and delete all this, and then I'll put the the signs back in. So we'll delete this. And then we're going to copy this all the way back down. I kept the first one, by the way, because I kept this one. And then I'm just going to copy this sign down. That's it's driving down like an airplane. We were flying. So I did that. All right. And then I'm going to delete all of this stuff. You have served your purpose, and you will now, let's just delete the whole thing, and you will now be, you no longer have any reason to be here, and therefore you will be deleted. So I'm going to select the whole thing. Why do you have to say it like that? I don't know. It's just, we're going to delete this whole thing, and then I'm going to underline the whole thing so it's not underlined, none of them. So I cleaned up the formatting, and then I'm going to copy down the signs again. Copy down the signs. Copy down the signs. We flew down there again. Copy down the signs. I'm going to fly it super fast. And there we go. Okay. And then we're going to go to the right over here. We got to fix up our subledgers. So I'm just going to delete all the stuff in the subledgers. Let's just get rid of this. We'll put in the ending balances in a second. Just delete all that stuff. Get rid of any underlines. Clean it out. Clean it out. Get rid of these subledges. Get them out of here. Boom. Delete. Get rid of any underlines. I'm not going to clean out the subledger for the inventory because I think we have enough room to continue on, and that's just too much of a pain. So I think that's all we need. So now let's go to the first tab, and we're just going to pull in our ending balances. So now I'm going to say this is I'll just call this an unadjusted balance. And so we'll go on to the month 2, and I'm just going to copy these numbers at the end of month 2. So these are going to be my starting numbers. Now the income statement's going to be a bit of a problem, but we'll see. I'll fix that in a second. I'm going to copy these. I'm going to go on to the adjusted tab and just paste these, but paste them just 1, 2, 3, just the formulas only, just the values. I mean, not just the values only. 1, 2, 3 values only. So there we have it. And it says I'm not in balance. Que paso? I think I need to change the formulas because I got a red thing here. What is happening? Okay, this just needs to be pulled over. The new accounts have not been added. I see what's happening. I see what's happening. I can see. I have balls in my head that act like seeing things. They help me see stuff. My seeing balls. I seen. Let's pull this one over. All right. My head balls seeing things. Okay. So there we have it. So now we're in balance. That's good. But we have an issue with the income statement because what I would like to have is 2 months. I want to have the 2 months combined together, and then the equity so that I can do my adjusting entries for 2 months. And this is only 1 month of data because we closed out 1 month last time. So okay, how am I going to fix that? I can go back on over here and say at the top we had, this was the prior month information that we put up at the top here, prior month. So I'm going to copy that for now and just put it at the bottom. So this was at the end of the first month. I can also get it from over here, by the way, the end of month 1, but I want the same number of accounts. So that's why I want to pull it from here. I'm just going to copy that and I'll put it underneath for now. Right click, pasting it, the formulas only, 1, 2, 3, formulas only. And I should pull over, let me pull over also the equity accounts there. So let's pull over these equity accounts. So there's what we had at the end of the first month. And basically, I want to combine these two together. So I'm going to say this equals the sum of the current income statement and the prior month. So then this is my, if I copy this over, my net income for the 2 months. So that adds up to 4770. All right. And so that's good. So now I have to fix the equity side of things. So the equity side of things then has to be the beginning balance equities. So it's going to be equal to the 65. It's going to be equal to, well, I can't do it that way. I'm just going to say, I'll just type it in there, 65,77896. And then this draws also has to pull down negative 500. And that's because this one shows that the first month was closed out to it. So I don't want to close out the first month to it. So I'm going to pull that out. So that means that if I have 2 months of operations, the first month wasn't closed out. So that brings it to the owner's equity of the 77, 8. And the difference between these two, this minus this, is the first month of operations, which is this. If I sum this up, that's going to be the 7428. So there's the 7428. So I want to pull that out and say now we're back to the 77896 without closing out the first month. And then we still have the investment of the 65,000 is the same. And then we had the draws, which were added in the second month, I believe, but we still need to, that should still pull down. Okay, so these numbers are the correct numbers. So I'm going to copy these now. I'm going to copy these and put them up top, and hopefully I'm going to paste them 1, 2, 3 for the values only and see if that puts me in balance. So if I go to the left, I still have a green 0. So I think that's correct. So now if I go back on over, let's close this, let's delete all this underneath. And then there's my beginning balances. So now I have my permanent accounts, which are going to be the same whether I think about it as 1 month ended 2/28 or 2 months ended 2/28, because the balance sheet is as of a point in time. And then on the income statement, I'm thinking of it as 2 months ended, and therefore I have 2 months of data. You might be saying, well, aren't these balance sheet accounts? You adjusted these. Well, yes, on the balance sheet, this would be one number on the balance sheet. It would be all of this together on the balance sheet, which would be 82,666. However, if I'm looking at the trial balance, this has to be the beginning balance, and then we break out of it the timing accounts, which are going to be basically the income statement. So this then is, in essence, my unadjusted trial balance. Unadjusted trial balance means that it's what the bookkeeper did, right? So like if I'm the public accountant in a CPA firm, I start my job, or this, you can think of yourself as putting both hats on, right? But if we think of them as two separate entities, like if I'm at a public accounting office, then I'm going to have the bookkeeper, the accountant or the bookkeeper is going to do their job in the accounting process, the accounting department in QuickBooks, and then they're going to give me the QuickBooks or the financial statements. And the first thing I'm going to do is take their numbers and put it into my worksheet here and call it the unadjusted balance, meaning this is what came directly from the accounting department out of their system, but it hasn't been adjusted for the adjusting entries. Now, I just want to point out that the adjusting entries do not mean that we're fixing the errors made by the bookkeeper. That's not what's happening, because we might be doing, this might be the same process would happen if I was both the bookkeeper and the adjusting process. The thing that's happening here is we've got an agreement between the bookkeeping or accounting department and the adjusting process so that the accounting department can achieve its goals and we can then shore it up to achieve our goals for financial reporting purposes and for taxes. It would be similar to saying, like, if I'm doing the bookkeeping and I'm a sole proprietorship and I have a business and then I have my personal bookkeeping, I want to do both of those bookkeepings, right? Well, how am I going to do that? I'm going to separate out the tasks by objective. I'm going to say, on the business side of things, I want to have basically a separate set of books as much as possible so that I can focus on the objective of revenue generation versus the set of books on the personal side of things, which has a different objective, which might include revenue generation, but also personal well-being for trying to budget my expenses and all that kind of stuff, right? There's two objectives. Similarly here, the accounting department has different objectives, making things fast, efficient, clean, communicating with everybody involved, employees, customers, vendors, making it as automated as possible so that it as least intrusive in the day-to-day activities, objective of the business, dealing with customers, vendors, employees, generating revenue. You want to be as little intrusive as possible. The bookkeeping system should just help you to communicate that information. And then the objective of the adjusting process, getting our books to be converted, tweaked, make sure that they're as close to the accounting system as possible method, like the accrual-based method, by doing adjusting entries, and do that for external reporting purposes, which might be used for internal reporting too, as far as management, the financial statement creation, but also for taxes if you're in the United States. Now, one other point on the taxes that I just want to point out, that if you're a sole proprietor, then a lot of CPA firms kind of shortcut this whole process. Why? Because you don't need a full double entry accounting system to do a Schedule C. They don't ask for the balance sheet, right? So whatever income statement you get from the client, you're going to say, well, I'm just going to enter that into the Schedule C, and it is what it is. But if you want to do a full service system, which is going to take more time because small businesses, unfortunately, sometimes aren't as sophisticated maybe in the bookkeeping, but if you want to shore it up and make sure that everything's correct, what you'd like to do is this, right? You'd like to do the full double entry accounting system, even though you're not going to enter the balance into the Schedule C necessarily, although you might have to deal with inventory, components of it, depreciation schedule. But you want to do this so that to make sure that your retained earnings is rolling over properly, so that you're recording the expenses in the proper period and doing the proper adjusting entries. It's a lot cleaner. You're gonna not have as many errors that way. So that's going to be kind of the objectives. Now let's go ahead and check out my subledger for inventory. So it's got a red thing here. So all I need to do, I believe, is change this check number to the current ending inventory. So I'm going to put this back down and say, here's the ending inventory right there. Boom. And so now we're back to green 0. So my subledgers are tying out, noting that normally I wouldn't be including my subledgers in my adjusting entry worksheet if I was a CPA firm, but we might as well clean everything up because this is our whole bookkeeping system, kind of like our QuickBooks account here. So we'll just clean the whole thing up here. All right. I need to pull in the subledgers for accounts receivable now. So let's go back on over to month 2. How can we do that? Let's just say, okay, here's my subledger. I'm going to go down to the bottom of this where my ending balance is. And then I'm just going to sum up each of the columns for each customer. I'll sum this whole thing up. And then enter. And then I'll copy that across. Well, that's not copying it. That's pulling it. That's different. That's cutting it. And then let's sum it up this way to see. So those are my ending balances for each customer. The balance still ties out here. So let's copy these. And then that's just going to be what my adjusting entry. I'll just put those right here. Right click, paste 1, 2, 3. So there's my ending balance numbers. I'll total that up, equal the SUM. And there's my subledger ending balances. 22,176 should tie out to what's on the AR general ledger 22,176. All right, let's do the same thing with the A to the P, accounts payable subledger. Let's go to the month 2, AP, accounts payable subledger. Here we have it. Accounts payable, scrolling down to the bottom. Down to the bottom. Let's sum it up and then copy it across. Equals the S to the U to the M. Sum it up. And all the way up. And then we'll copy that across. And then we'll sum it up sideways. Comes out to 4008. Copy our balances. We'll just copy that, pull them over to the ADJ worksheet. Right click, pasting it, just the values only. 1, 2, 3, if you please. Let's hit the sum it up sideways. And we get 4008. Does that tie out to what's in the general ledger, to the sub ledger? I think it do. It does. 4008. So there we go. All right, so I think we have our unadjusted numbers, and now we'll get to making those adjustments to get the adjusted balances for external reporting purposes, as well as possibly tax preparation.